this video is going to be the 10 commandments of investment. So this is not going to be restricted to crypto investment or real estate or investment or whatever. It's just going to be general investment advice. So because of that, I think this is going to be primarily invested in the stock market, right? And we're going to be asking ChatGPT to give us 10 bullet points or the 10 commandments of investment, and then see if it's a good advice or not, right? So without further ado, let's ask ChatGPT and see what we get, right? So let me go ahead and type the question in here and then hit enter, and then we'll see what we get. So it says, what are the 10 commandments of, let's even do 10 rules, right? 10 rules instead of 10 commandments. What are the 10 rules of investment in the stock market, right? Stock market. And then, so what are the 10 rules of investing? 10 rules of investment in the stock market. So let's just ask it and see what we get. And it always gives you a disclaimer, right? As an AI language model, blah, blah, blah. I mean, even the freaking AI knows to write a disclaimer, right? This is not an investment advice. This is just for entertainment, right? And for education as well, right? So use it at your own discretion. But let's begin from bullet point 1. It says, invest for the long term. Yes. I think we live in a society where people just, want to get things today, right? Everyone wants to get this, wants to benefit today and, live for today. I mean, it makes sense, right? Because tomorrow isn't promised. But you have to plan as though you're going to live forever, right? And live as though you could go at any point. I mean, because that's how it is, right? So investing for the long term is the right mindset to have. And investing in the long term means that you probably have to start early as well, right? The sooner you start, the better for you, because of the exponential, right, component or compounding interest side of investment, right? Because if you invest $5 today and it compounds maybe 10% each year, I mean, you can imagine that the person who started investing at 18 will probably have more money if compared against someone who started investing at 40, right? Given the age gap and all that, right? If by the time the 18-year-old hits 40, they would have probably made so much money that it would to some extent even be discouraging for the person who was 40 to start investing at that age, right? So the sooner the better. And then it says invest for the long term. The market can be volatile in the short term, so it's important to have a long term investment horizon to ride out market fluctuations. Yes, if we have a crypto, say, a recession this year, that doesn't mean that 5 years from now I will have that recession, right? So there's even something called dollar cost averaging, where you want to, instead of buying a bunch of companies at one time, if you have maybe 5,000 and then you want to invest, instead of investing a whole 5,000 at one time, you could just divide it up and buy maybe $500 worth of investment, right? And divide that across several months, or maybe even a few years, and that will average out the price for you. Hence, dollar cost averaging. Number 2 bullet point here says diversify your portfolio. Yes, you don't want to be that guy, right? That puts all your egg in one basket. If you caught yourself, if you were somebody that put all their money in the GameStops, or let me say, Blockbuster, right? I mean, you could have lost all your money, right, during a company's downfall. So you don't want to be that guy. No matter how much you believe in a company, always try to at least diversify. Put some of your money, divide that money up across, various companies or various investment portfolios, right, and see how each company or each investment performs. And then maybe the ones that perform well, you may want to buy more off, right? And, keep that strategy. And then Three bullets here says, or third bullet point says, do your research. Doing research, I mean, if you're gonna invest, right? I mean, you don't just want to blindly be throwing money at anything. I mean, that's kind of like the that's one way. That's a guaranteed way for you to lose your money. So if you care about your money, and I'm guessing that because you're investing, that you want to make money and don't you don't have any intentions of losing money, right? So if you want to make money, then the best way to go about it is to do invest. I mean, to do your research, right? You want to research the company, what the team is, what the product they're building is, how far they are into the project. Do they have a product out, prototype or whatever? Who else has invested in a company or the project? I mean, you want to be doing this. I mean, but if it's an established company, they'll probably have a report, right? You can look at their financial reports, see maybe what their revenue, what their income, what their cost of operation is, right? You want to look at the expenses and all these kind of details to see how much profit maybe the company makes every quarter or every year, or however duration of time that you want to be looking at. You could do that to see if that's worth your investment or worth your money. So doing your research is definitely good. Number 4 says invest in quality companies. Yes, I mean you can only invest in companies after doing your research, right? So it only makes sense to have bullet 4 after doing your research. And let me even read that a bit more. It says look for companies with strong fundamentals, a competitive advantage, and a solid track record of earnings growth. Okay. Yes, I mean invest in quality companies, right? I mean you want to be looking at companies that has become as pervasive as Google, right? I mean, you probably don't go a day without using one of Google's products, right? Mind you, Google own Gmail, they own YouTube, they own the search. So you probably don't go a day without using some form of Google product, right? And then I mean people maybe more relevant to the people that live in the States, but Apple has also become as pervasive and as ubiquitous even as Google is, right? And some could even argue that maybe Apple is even more pervasive than Google, because look at Apple products, right? I mean, the iPhone, people use iPhone everywhere, the Macs. Apple products are everywhere. I mean, Apple owns Beats as well, right? And that's probably not the only company that they own. They own various other companies that I may not even be aware of as I'm speaking to you right now, or as I'm making this video right now. So invest in those kind of companies. But I mean, the two that I've mentioned are tech, right? I mean, there are other companies as well. They could be Nike, they could be even food products, right? That, I mean, stuff that you use. It doesn't necessarily have to be stuff that you use, but you have to do the research and make sure that the quality of the company is actually on point, right? And then once it's on point, you've done the research and see that it's on point, then you can go ahead and perhaps invest in it. And I mean, you can also, if you're investing, if you have cold feet, maybe you can start off by investing in small amounts. And like I said, once you see the company starts to perform, then you can perhaps begin to input or increase your investment as time goes. And then 5 says invest in what you understand. Yes, and do invest in what you understand. And if you don't understand, perhaps that could be a great time for you to do more research, right? And in doing more research, you can consult people who know more than you do, and ask them to explain it to you. Maybe read the company's financials or read any sort of reports that they have or documentation that they have, and have the other people explain it to you. Or these days, you can even watch a YouTube video about some of these explanations. And if you can't find a video, you can always Google to find some explanation, or even read a Medium article that maybe someone else has written about what you're trying to understand, and to use that to your advantage. Use any resources at your disposal. I mean, these days there are all kinds of resources at our disposal. And even now we have ChatGPT, right, that you can also ask to explain it to you. You can ask ChatGPT to break it down to a 4-year-old, to a 3-year-old, to however old age group that you want. And it'll break it down to you, and you can definitely try to understand or get the comprehension that you need to be able to go ahead with your investment if you find the company to be quality, of course. And then 6 says have a disciplined approach, develop a disciplined investment strategy and stick to it regardless of short-term market fluctuations. Yes, never let the short-term fluctuations deter you from long-term sight, right? If you're investing for the long term, then how the market behaves or acts in the short term shouldn't affect you to to a great extent. You should always keep the long-term idea or the long-term perspective in full view. So that's a good advice. And then 7 says to have a realistic expectation. Don't come in there expecting to get a 1000x with your first year. Or I mean, that may be too far fetched, right? But don't come in expecting to make 100% your first year or whatever time duration. I mean, if you're hoping to get that maybe within 5 to 10 years, that is a more realistic goal, right? So have a realistic expectation and, take it a step at a time. Don't look at don't look at what other people are doing. Do make sure that you take all the information in and you try to come to your own conclusion, because don't think that someone on TV telling you to do stuff or go buy this company or that don't have their own interest. Everyone has an interest, right? And more than likely that interest isn't going to benefit you. I mean, you have to do your own research and you have to make sure that you're moving at your own pace and singing, to your own tune. Number 8 says avoid emotional decision making. Yes, don't make decisions, in fear. That has happened to me so many times that I couldn't emphasize it here in this short video, right? You don't want to be making decisions in fear. So it says, don't let fear, greed, or other emotions drive your investment decisions. Stick to your investment strategy and avoid knee-jerk reactions to market volatility. Yes, make sure that if you have to make a major decision, make sure to take some time to reflect, right? Sleep on it. Maybe even consult other people. I mean, I'm not saying to take other people's advice, but talk to people, try to see how they're seeing things, and then take that into consideration as you're making your decision, right? But don't blindly follow anyone's advice, not online, not from people who claim to be experts, right? I'm not telling you I'm an expert, right? I mean, but I'm just putting my opinion out here. This is an opinion. So do take it with a grain of salt. Number 9 says monitor your investments. Monitor your portfolio to ensure it remains aligned with your investment goals and adjust your strategy as needed. Yes, I mean, we're constantly evolving, and so our strategy may evolve, right, as we as people evolve, right? So monitor your investment. Make sure that you're consistently and constantly reanalyzing what your strategy is, right? I mean, and if any of your strategies needs revision, don't be afraid to revise them. Revise them as you go. Even Einstein, revised his theories, right? When he realized that the calculation that he had made for the bending of light, I mean, he had to go back and change some of his calculations, for Eddington to be able to see the exact bending of light, right? So, I mean, as we're human beings, we make mistakes, but I mean, it's also good, right? It reminds you that we're human. And so, you can always revisit some of your old strategies, make sure that they're, that you still agree with them, or that, they still meet the standard that maybe perhaps you had when you were making them initially. And then the last bullet here says, seek professional advice. Consider seeking advice from a financial advisor or investment professional who can help you develop a personal investment strategy based on your goals, risk tolerance, and other factors. Yes. This one, I mean, I would take that with a grain of salt as well. I mean, you do want to talk to someone, a professional. I'm not saying go give your money to a professional to invest it for you, but I mean, you can definitely, that could be an advice that you take into consideration as you're making your own decisions, right? So yeah, seek professional advice, but take it with a grain of salt, because I don't think professional just take it with a grain of salt. I mean, that's all I'm gonna say. I'm not gonna get too much in detail about that one. But that's all we have for today, right? So I'm gonna tell you, if you have any questions, don't hesitate to put your questions in the comment section, and I'm gonna try to answer every question in the comment sections. And subscribe to the channel. We have a great deal of bangers on the way, so stay tuned, and you won't be disappointed, man. I mean, this will probably be one of the channels that's going to be giving a great deal of insight about investment, about finance, money, and not only that, right, about a great deal of topics, right? And that's what we're going to be doing. We're going to be giving bangers after bangers, man. So stay tuned. Your boy, the Hood Tutor, man. I'm here at your disposal, man. I'm here at your service, bro. And if you see any room for improvement, just let me know, man. I mean, this channel is young. We're still growing. So, I mean, this will be the ideal time for us to incorporate any one of those constructive criticism, right, that